Have you ever harbored the uncomfortable sensation that despite working longer hours, receiving pay increments, and strictly managing your domestic budget, you are somehow slipping backward on the global economic ladder? You are not suffering from a severe case of financial paranoia. You are the deliberate casualty of a silent, highly sophisticated monetary mechanism. Most citizens falsely assume that their commercial bank account is a secure, fortress-like vault designed specifically to preserve the purchasing power of their hard-earned currency. In reality, the traditional banking institution is not a safe haven for your capital. It is an aggressive, invisible extraction engine. Whilst you are diligently trading your finite physical time and intellectual energy for digital numbers on a screen, the banking elite are executing a stealthy program of systemic erosion. They do not steal your wealth by physically breaching your property or altering your balances. They execute it by quietly dissolving the intrinsic value of every single pound you possess. This structural phenomenon is known as currency debasement, masked elegantly under the academic guise of inflation. The modern educational system ensures you remain completely illiterate regarding the true fractional reserve architecture, leaving you highly compliant and easily manipulated. In this presentation, we shall completely dismantle the deceptive framework of high street banking and expose the hidden economic tricks used to systematically strip away your financial autonomy. We are going to examine the exact mechanisms that global central banks employ to manufacture artificial liquidity at your direct expense. If you are thoroughly prepared to discard the archaic financial myths that have kept the global population economically trapped for generations, you must pay undivided attention to every segment of this analysis. Let us begin by uncovering the deceptive illusion of the standard savings account and why keeping liquid cash is a mathematical strategy for guaranteed poverty. Do you honestly trust your bank? Or are you simply unaware of the massive trap hiding behind your digital balance? Drop a comment below if you suspect the system is rigged, and let us dive straight into the first layer of institutional deception. To properly comprehend how the system stealthily drains your capital, we must examine the core mechanics of what financial academics call the fractional reserve banking architecture. When you walk into a prestigious high street banking institution and deposit your money, you are fundamentally misinterpreting the legal reality of that specific transaction. You believe the institution is safely storing your property in a private locker. However, the moment that transaction settles, the cash legally ceases to be your personal asset. It effectively becomes an unsecured loan to the bank, and you are transformed into a minor creditor holding nothing but an institutional promise. The secondary layer of institutional extraction is executed through the aggressive hidden mechanism of negative real interest rates combined with fiscal taxation. Let us analyze a practical economic scenario that traditional high street banks intentionally omit from their marketing brochures. If a commercial institution offers you a modest 3% annual interest rate on your savings, you might falsely assume your wealth is growing. However, if the real, unmanipulated rate of currency inflation is currently running at 8%, your money is losing 5% of its purchasing power every year. The bank is essentially charging you a stealth premium to hold your capital whilst they utilize it to purchase high-yielding investments for their own corporate balance sheet. To make matters significantly worse, the state steps in to levy a direct capital gains or income tax on the nominal interest you received. They are literally taxing you on a financial gain that does not actually exist, forcing you to pay a premium on an asset that has fundamentally lost real-world value. This is the ultimate double extraction framework. The bank dilutes your purchasing power, and the fiscal authority taxes the illusion of your profit. The elite do not retain their multi-generational wealth inside these depreciating cash vehicles. They immediately convert their liquid profits into hard, scarce, and productive assets. They acquire prime land, commercial enterprise equity, and scarce digital protocols that cannot be artificially duplicated by a central bank printing press. While the general public is taught to consume debt and save paper, the global 1% accumulate structural leverage and scarce property. You must urgently transition your financial perspective from a saver of devaluing currency to an owner of scarce infrastructure before the system dissolves your remaining reserves. If you continue to follow the outdated industrial advice of hoarding paper fiat, you are voluntarily consenting to your own economic subjugation. Let us look at how the global financial grid locks you into this system through modern digital control. The third and final system that guarantees the silent elimination of your capital is the modern transition toward a completely cashless digital banking matrix. For centuries, the physical existence of tangible cash served as a vital emergency valve for the average citizen against institutional insolvency or overreach. If a bank began acting recklessly, the public could collectively demand their physical currency, a corrective process known as a traditional bank run. In our modern algorithmic era, the systematic elimination of physical currency removes this defensive mechanism entirely, locking your wealth permanently inside an electronic grid. Once your capital is fully digitized, you are completely at the mercy of institutional fee structures, negative interest rate policies, and sudden regulatory adjustments. The banking system can theoretically introduce a negative interest rate overnight, directly deducting money from your balance simply for the crime of holding currency. Furthermore, a digitized financial system grants corporate institutions and central authorities total visibility and absolute veto power over your personal transaction velocity. If your political views, spending habits, or social compliance metrics do not perfectly align with prevailing corporate parameters, your access can be frozen instantly. Your digital wealth can be frozen, restricted, or entirely neutralized with the single stroke of an enterprise keyboard, leaving you without options. The global elite do not leave their empires vulnerable to the whims of centralized banking compliance. They distribute their sovereignty across international jurisdictions. They utilize sophisticated legal structures, private trusts, and decentralized immutable ledger assets that exist entirely outside the traditional high street banking parameter. By combining automated digital asset structures with strategic global placement, they create an ironclad shield that no commercial bank or regulatory shift can penetrate. This is how you shift from a position of absolute vulnerability to a state of total structural command over your future. Now that we have completely exposed the hidden financial machinery that is quietly dissolving your purchasing power, we must address your immediate tactical response. Understanding that the commercial banking system is an extraction mechanism means absolutely nothing if you continue running the exact same financial blueprint tomorrow morning. You do not need to panic or withdraw every single penny from your local branch this afternoon, but you must make a firm commitment to execute a pivot. Stop acting as a passive lender to institutions that use your capital to suppress your economic growth, and start acting as a sovereign asset allocator. Dedicate your available hours to acquiring deep financial knowledge, mastering modern digital tools, and moving your surplus wealth into scarce, productive infrastructure. The digital landscape has fully democratized access to international markets, automated business systems, and decentralized assets that bypass traditional banking intermediaries entirely. The wealth gap between those who blindly save paper currency and those who strategically accumulate hard assets is expanding at an unprecedented velocity. If you wish to insulate your family from this upcoming monetary correction and claim absolute autonomy over your time, you must hit that subscribe button right now. Activate the notification bell immediately so you never miss our advanced wealth protection strategies and structural financial breakdowns. This channel is strictly engineered to serve as your private modern academy, delivering the raw, unmanipulated economic truths that traditional headmasters and university professors intentionally withheld from you. I want to hear your perspective directly, so drop a comment down below right now detailing your immediate strategy to diversify away from high street banks this month. Thank you for your valuable time. Maintain your focus on building real asset leverage, and I shall see you in our very next analytical presentation.